Good morning everyone. My name is Manjiri Nandre. Today my topic is cost accounting and economic cost. Cost accounting is a form of managerial accounting that aims to capture a company's total cost of production by assessing the variable cost of each step of production. Cost accounting can also be used for internal purpose. It is used by company's internal management team to identify all variable and fixed cost. Because of cost accounting, company can measure financial performance and make future business decisions. So here are definition of accounting cost. Accounting cost is a record of an activity. An accounting cost is recorded in the ledger of business, so the cost appears in an entity's financial statements. Economic cost includes the gain and losses in terms of time, money and resources. It also refers how much it costs us to deal with the consequences of a problem. So here are the definition of economic cost. Economic cost. Economic cost is the combination of losses of any goods that have a value attached to them by any one individual. Economic cost is used mainly by economics as means to compare the prudence of one course of action with that of another. There are many types of cost accounting. They are defined below. Fixed cost. Fixed costs are that cost that does not depend on the level of production. These are like the mortgage or lease payment on a building or a piece of equipment that is depreciated at a fixed monthly rate. An increase or decrease in production does not cause any effect in the fixed cost. So another is variable cost. Variable costs are costs which are directly related to the company level of production. It changes from month to month. For example, electricity bill. So another type is operating cost. Operating costs are costs with the day-to-day operations of business. This cost can be either fixed or variable depending on the situation. So fourth type is direct cost. Direct costs are the expenses which are directly related to the business operations. For example, labor, material, fuel, rent, etc. And the fifth type is indirect cost. Indirect costs are the costs which are not directly related to a product. It can be fixed or variable cost. Indirect costs also include fluctuating expenses such as fuel, etc. Another type is opportunity cost. Opportunity cost, also known as alternative cost. It is like that alternative use of that resources. Other type is controllable cost. Controllable cost is the cost important in business management in terms of business survival and profitability. These costs have direct relationship with the product. For example, direct labor, direct material, bonus, etc. Last type is sunk cost. Sunk cost refers to an investment already incurred that can't be recovered. So there are four types in economic cost: fixed cost and variable cost, as I have mentioned in the starting of the types. So now total cost. This is the sum of fixed cost and variable cost which helps product manager to evaluate their overall profit margin. And last type is marginal cost. Marginal cost is the cost of production in the cost of producing one additional unit. So here are some uses of accounting cost. Accounting cost helps in ascertainment of cost, helps in control of cost, helps in decision making. It also helps in fixing selling prices. It helps in inventory control, helps in cost reduction. Economic cost allow accounts to take into consideration both the explicit account cost and the hypothetical cost of a potential business decisions. Economic costs are important for businesses because they help them determine long-term strategies and summarize the company's actual and potential values. Now, the advantages of accounting cost. Accounting cost helps measuring and improving efficiency, identification of unprofitable activities, fixing prices, price reduction, control over stock, evaluates the reasons for losses, aids future planning. So now disadvantages of accounting cost. Cost. The benefits of cost accounting comes with a price. Since costing methods differ from organization to organization, it's not clear how these costs might manifest themselves until a specific firm is examined. Complexity. Generally speaking, complex cost accounting system requires a lot of work on the front end, and constant adjustments need to be made for improvements. Additional steps to verify accuracy. Even if the rigidity of financial accounting creates some inherent disadvantages, it does not remove the uncertainty and misapplications of accounting guidelines of cost accounting. Uncertainty equals risk, which always comes at a cost. This means additional and often more vigorous reconciliations of verify accuracy. Now moving forward to the difference between accounting cost versus economic cost. Accounting cost uses standard cost incurred in business. Economic cost uses what if scenario. Accounting cost uses explicit cost only. Economic cost uses long term time. Accounting cost determines profit or losses for a specific period of time. Economic cost considers both explicit and implicit costs. Accounting cost used for tax purposes or to determine financial health of your business. Economic cost used to make long-term strategic decisions. So this was my presentation on accounting cost and economic cost. I would like to stop here. Thank you so much. You can see my PPT file in the comment section. Thank you.